Well, hi everyone, and welcome to the Infinity Futures Daily Trading video. My name is Rollie White, and I'm here to talk to you about the trades we took in our live trading room on Friday, September 19th, 2014. Well, looking at today's economic calendar, we can see that there were only two events on the schedule in what was a very light day. At 9 o'clock, we had the Conference Board leading index data being released, and it came in lower than expected at 0.2% versus an estimate of 0.4%. We also know that it was the first day of the G20 meetings in Australia. Now, the pre-market sentiment was fairly positive coming into the open. The Asian markets had closed higher on China liquidity moves, and sentiment was improving in Asia after the People's Bank of China lowered short-term borrowing costs for banks in its second stimulus move this week. If you remember earlier in this week, the People's Bank of China put in about $84 billion worth of capital into the financial markets. Some of the best performing markets were in China, where the Shanghai closed up 0.6 of a point, and Hong Kong closed up 0.6 of a point on broad gains in the banking and finance sectors. We also saw that the Japanese Nikkei closed up 1.6% as the yen was dropping after the government came out and said it would reform the government pension investment fund. As far as the European markets are concerned, they were open and trending higher after the Scottish referendum. Now, investors in Europe were relieved after Scottish voters rejected independence and elected to remain part of the United Kingdom. We did see that the United Kingdom banking sector was leading the markets higher after the impact of secession costs had in fact dissipated. We did, however, note that German producer prices were under pressure with the decline of 0.1% in this month versus the prior month, and down 0.8 of a point over the prior year. As far as the United States is concerned, Wall Street did figure to open up higher on the Scottish relief rally. Now, the futures were pointing up coming into the open following the global markets higher after 55% of Scots voted to stay in the United Kingdom. Now, we also saw that there are no major corporate news scheduled for today, which on otherwise is options expiration Friday. Focus for many U.S. investors would be on the Conference Board leading index and news flow from the G20 meetings on an otherwise slow news day. As far as our trading activity is concerned, we attempted 4 entries in the market and only had 1 fill in the crude oil market. But before we take a look at that trade in any detail, I do need to remind everyone of this following important disclaimer. And that is that trading futures involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources, as you may lose all or more of your initial investment. And always remember that past performance is not necessarily indicative of future results. Well, turning to the charts, let's begin here with the Euro FX futures market, and we can see coming into the open today we had 1, 2, 3 bars moving lower, and then we had 1 bar retracing, and I was hoping the second bar was going to retrace up here and give me a short entry at 128.73, but the market fell away from me here and I had to take my trade out of the market. The next market I'd like to take a look at is the gold market, because there was an opportunity there, and this occurred also right here at the beginning of the trading session. You can see we had 1, 2, 3, 4 bars moving lower, followed by 1 bar retracing, and I was hoping that this second bar was going to retrace up here and give me a short entry right below the main pivot point, going short at 1223.2, but the market fell away from me and I had to take this trade out of the market. The next market I'd like to take a look at is the crude oil market. And looking at crude oil, we can see this is where we had our first fill of the day. Right here at the open, you can see we had 1, 2 bars moving lower, followed by 2 bars retracing, and this gave me a short entry at 91.90, where I was risking 10 ticks to make 10 ticks on this particular trade. Well, I got my fill, the market moved a few ticks in my direction, and then very suddenly and somewhat violently decided just to spike up against me and ended up knocking me out for a 10-tick loss, which put me down $100 per contract on the trading session. Was a little surprised to see this happen because everything was moving so nice and slowly and sideways, and as soon as I got filled, wouldn't you know it, after the market took off and knocked me out. Now, staying with crude oil, we can see here that the crude oil market was, in fact, moving a bit lower, and we saw red bars, the RSI below 30, and I saw this bar retracing here, and I decided to attempt a short entry here at 91.46, and I was looking for a 10 to 20 tick move out of this, an opportunity to make up for this loss earlier. Well, this bar opened up here and it moved within one tick of giving me my fill. It went to 91.45 and then it fell off against me, so that when it went through my profit target, I needed to take this trade out. So unfortunately, within one tick of getting a nice little opportunity for about a 15 tick move, but it didn't happen and I had to take that trade out of the market. So this is basically where we left the trading session. We had 4 attempts in the market. I had this one fill. I was down $100. And I told the folks in the room that I would come back after lunch, somewhere between 12:30 and 1:30 in the afternoon, to see if there might be some additional opportunities. But I also said I wanted to be careful because it was options expiration Friday, and I just didn't want to get tied up in any unnecessary volatility in the afternoon. But when I came back from lunch and took a look at the markets, I did see that there were a couple of opportunities to take advantage of. The first one that I saw was here in the E-mini Dow market. And you can see that at this point in time, this is right around 12:30. The market had 1, 2, 3 bars moving lower, followed by 1 bar retracing and a second bar retracing. And I saw this as a nice opportunity to catch a short entry right here, just below the previous day's high. And I was risking 8 ticks to make 8 ticks on this trade, so I got my fill, and the market actually took a tick step against me and then came down and moved in my direction. Now, once the market moved 5 ticks in my direction, my stop loss moved to break even, and I ended up trailing the market by 5 ticks, but you can see we came all the way into my profit target, and this enabled me to walk away with $40 per contract traded, and I put a little bit of a dent in that $100 loss I had earlier in the day. Then next, I was looking at the crude oil market right at the close of the crude oil pits. Now, the crude oil pits, that close at 1:30, and so I look at this market between 12:30 and 1:30, and right here we were about 15 minutes after 1 o'clock, and I had established this level at 91.66 to be an area of resistance, and I had established this area here at 91.46 to be an area of support. The idea here is that as we get within a couple of minutes of the close of the pits, the crude oil markets become very, very volatile, and they attack these levels. So you can see here that right around 1:28, 2 minutes before the close of the pits, I had a long order in the market here at 91.66, and you can see the market came up. It filled me. It moved about 3 ticks in my direction and then paused and then moved against me about 6 ticks, and I thought, oh no, this thing's going to come out and knock me out. But then it turned around and started moving rather aggressively in my direction. When it moved 5 ticks in my favor, my stop loss moved to break even, and I trailed the market by 5 ticks, and ultimately my trailing stop here was at 91.71. But by that time, I had picked up a full 10-tick move, which was worth $100 per contract traded. So as a result of these 2 afternoon trades, I was able to make up my loss in the morning and actually leave the day up $40 per contract traded, and I was happy to see that on what was otherwise a very slow and difficult day to trade the markets. And so with that, I'm looking forward to the weekend and also looking forward to seeing what kind of opportunities might present themselves next week. Well, look at next week's economic calendar. You can see that we have a relatively busy week. We start things off on Monday with existing home sales and FOMC member Dudley speaking. Then on Tuesday, we have FOMC member Powell speaking. We have FOMC member George speaking. We have the house price index coming out, flash manufacturing PMI, and FOMC member Kutcher-Lakota speaking. Then on Wednesday, we have new home sales, crude oil inventories, and FOMC Mester and Evans speaking. And then on Thursday, we have core durable goods orders, unemployment claims, Flash Services PMI, Natural Gas Storage, and FOMC member Lockhart speaking, and we conclude the week on Friday with the final GDP numbers and the revised University of Michigan consumer sentiment. So once again, a fairly nice distribution of planned activities for next week, and hopefully collectively these are going to give us some nice opportunities to trade the market. And with that, I'd like to thank you all for watching today's daily video. I wish you a pleasant evening, a wonderful weekend. I look forward to talking to you next week. Take care and good night.